The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Investing is one of the keys to financial freedom. With the current climate of the world, it's pretty tempting to buy useless that you really don't need. But if you put money into good investments compounded over time, you could have the ability to achieve financial freedom and make your money work for you instead of against you. But investing equates to risk. Investment is a world of risk and reward mixed with uncertainty. Nothing is assured. The only thing that is sure is the 2% inflation eating at your buying power every year. Investment scams on headline news have made people turn their backs on investments altogether. Just imagine putting your life savings into a company and you come to find out that it's a scam. No! Whether you are a beginner, intermediate, or expert at investing, the advice of Warren Buffett is wisdom that many people have used to become profitable. We've personally used all of these tips by Warren Buffett, and they've changed our entire outlook of investing. In this video, we will be going over our own Warren Buffett's top 10 investment tips that could hopefully benefit you in your journey of investing. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and research. If you like that type of content, be sure to like and subscribe for more weekly content. If you have any companies or stocks that you'd like us to cover, let us know in the comments down below. Also, please note that we are not financial advisors, so please do your own due diligence. Let's get right into this.
Evaluating that company is within what I call my circle of competence. I understand what they do, I understand the economics of it, I understand the competitive aspects of the business.
Tip number 10. Never invest in a business you cannot understand. As Warren Buffett said, you must first understand what the company does as well as its economic aspect and the competitors. Not knowing about these things is like taking a test without studying. Peter Lynch also agrees with this idea. He even said, never invest in an idea you can't illustrate with a crayon. Tip number 9. Everyone's got a different circle of competence. The important thing is not how big the circle is. The important thing is staying inside the circle. Grandpa Buffett said that the most important aspect of investing is defining your circle of competence. For example, if your work is in the fashion industry, why would you then YOLO a large part of your net worth in the hottest biotech company just because you overheard some friends talk about some breakthrough science? Even if that information turned out to be accurate and you bought it at the right time, you wouldn't know when to sell it because you never really knew why you bought it in the first place. Self-evaluation is key. Know your strengths and weaknesses, then focus on the things you're good at, because if you have mastery over something, you could do it even when you're asleep. Just like Warren Buffett said, if you don't find a way to make money while you sleep, you will work until you die. Tip number 8. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. While some people out there just hop on what's hot, Warren Buffett does not play around with his stocks. Tip number 7. If you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. Warren Buffett is one of the richest men in the world, earning beyond the 10% average earnings of the S&P index every year. But in an interview, the ultimate dynamic duo of Buffett and Charlie Munger were asked, when is the right time to sell?
We have held the Washington Post stock since 1973. I've never sold a share of Berkshire, having bought the first shares in 1962. And we've held Coke stock since 1988. We've held Gillette stock since 1989. Held American Express stock since 1991. 40 years ago, my sales were all because I found something that I liked even better. I hated to sell what I sold, but I also didn't want to borrow money. So I would reluctantly sell something that I thought was terribly cheap to buy something that was even cheaper. Those were the times when I had more ideas than money. Now I've got more money than ideas, and that's a different equation. We probably had one view of the long-term competitive advantage of the company at the time we bought it, and we may have modified that. That doesn't mean we think that the company is going into some disastrous period or anything remotely like that, but we probably don't think that their competitive advantage is as strong as we might have thought, as we thought it was.
Tip number 6. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Warren Buffett strongly believes that the people who don't have any idea how to analyze businesses tend to think they're on the safe side by buying stocks from 50 different companies, when in reality, most portfolios of great investors are only made out of a few stocks, not 50 random ones.
If you look at how the fortunes were built in this country, they weren't built out of a portfolio of 50 companies. They were built by someone who identified with his with a wonderful business.
First things first, when investing, identifying which businesses are going to make it in the long run is one of the fundamental things that you should do before placing your money in a certain company. Tip number 5, you don't need to be a rocket scientist. Investing is not a game where a guy with a 160 IQ beats a guy with a 130 IQ.
You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort.
According to Warren Buffett, investing is a no-brainer, and you don't have to know everything. What you need is the right amount of temperament. Tip number 4, price is what you pay, value is what you get.
When you're just looking at the price of something, you're not investing. You can buy small pieces of businesses for less than you can buy whole pieces of businesses.
For the premium you'd have to pay if you were buying the whole.
Basically, just look at the business, see how well the business is doing, maybe do some due diligence on the business, and that'll determine the profitability of the business that you're placing your sweet cash into. Tip number 3, beware the investment activity that produces applause. The great moves are usually greeted by yawns. Boring is beautiful, and Warren didn't even have to say anything else, as investments are meant to grow your hard-earned bucks.
And I don't know when to buy stocks, but I know whether to buy stocks. The average person will not know enough to know which stocks to buy.
Remember, not all noise is news. The stock market is unpredictable. So are the headlines that pass by just to steal the show. Tip number 2. My advice to the trustee couldn't be more simple. Put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index fund. The OG has spoken. Index funds work. Not everyone has to pick individual stocks. This is not a game that everyone needs to play. If you want to play it safe, then it's perfectly fine just investing in the S&P 500.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million now.
Low-cost passive indexing might be the key strategy for investors. An index fund is basically a portfolio of stocks and bonds designed to track the market. It requires less attention since it follows a passive investment strategy. Tip number 1. The best investment you could make is an investment in yourself. The more you learn, the more you'll earn. Francis Bacon's quote, "Knowledge is power," is often seen as a universal truth. But in reality, knowledge can only be powerful when carefully organized and properly executed with action. Just like Napoleon Hill said, whoever said that knowledge is power did the world a great injury. He should have said, organized knowledge expressed in action is power. What we're saying is, knowledge is important, and feeding yourself with knowledge is one of the key fundamentals of successful investing. Invest in yourself and learn as much as you can. Investing in yourself has the highest ROI because whatever you learn, you can carry with you for the rest of your life. Our advice to you guys is to find out which way you learn the best. Is it through reading, listening, or visualizing the information? Whatever the case may be, just know that a little bit every single day goes a long way. If you spent just 1 hour a day learning about the financial market, then in just 1 year, you would be ahead of most people who don't take time out of their day learning.
You're your own biggest asset by far. I mean, you've got all kinds of potential. All the people in this room, you're lucky to be in this country, gotten a good education, but most people go through life using up a very, very small part of their potential. And so anything you do that invests in yourself, that's the best investment you can possibly make.
We hope you've enjoyed this video. It's refreshing to see Warren Buffett at 91 years old still at the top of his game. There's no doubt that Warren Buffett is a legend in the financial industry. He's living a simple and content life, and that's what makes him successful. Well, other than the fact that he has a brilliant mind in the financial space. If you've learned anything, hit that subscribe and notification bell to be constantly updated. We really appreciate you watching, and until next time, peace.